cost treatment. People all over the country trust Bosley because they're ahead of the curve. They use the latest technology to give you your real hair back. And the best part, Bosley's permanent solution is protected by the Bosley guarantee. Let them show you for free how awesome your hair will be. And a gift card for $250 off. Text FIND to 642-642. Ask about the Bosley guarantee. That's FIND to 642-642.
Sorry about that. No, I've been staying at my dad's place because of everything. Go. What's your favorite institute? He's good. Yeah, I know. We keep missing each other. I've been working out of my dad's house. Doing some reading. I should be working out more. I know it's important to stay healthy. It's just, I don't have the time. I just feel like I'm drowning.
In tough times like this, we know it can be easy to neglect your own health and well-being.
Dad, it's the girls.
What kind of dance is that?
While you care for your loved one, you also need to care for yourself. Go to aarp.org/caregiving for free mental health and self-help tips.
Some of those moves last week and the speed of the moves caught my eye. I would be concerned if I saw disorderly conditions or persistent tightening in financial conditions that could slow progress.
I'm Mark Crawford with Bloomberg's First Word News. President Biden's in Tulsa, Oklahoma to mark the 100th anniversary of a massacre and the destruction that took place in a prosperous black neighborhood. The president will meet privately with survivors of the massacre. Up to 300 black Tulsans were killed. Thousands of survivors were forced for a time to internment camps overseen by the National Guard. Burned bricks and a fragment of a church basement are about all that survived today of the more than 30-block historically black district. Hundreds gathered Monday night to observe the exact moment the race massacre began. President Biden is set to unveil plans aimed at reducing the black-white wealth gap, including proposals aimed at boosting home ownership and helping minority small businesses. A solemn crowd filled the intersection as 10 minutes of silence began last night at 10:30. All of the streetlights in that area were turned off as well. A cyber attack on JBS, the world's biggest meat supplier, has forced the shutdown of some of the world's largest slaughterhouses. Former Homeland Security Secretary Michael Chertoff spoke with Bloomberg earlier.
We saw the Colonial Pipeline shut down as a result of the ransomware attack, and those who stepped up. And then we saw the attack against the meat company. We don't quite know yet the nature of the attack, but it required them to shut down their operations. And that shows the extent to which our food supply, our health system, and our energy is dependent on cybersecurity.
JBS shut down its North American and Australian computer networks after the attack. Democratic lawmakers want to double government funding for research on gun violence. The fiscal 2020 budget that President Biden proposed on Friday sets aside a total of $50 million for that purpose. Democrats say the research needs to be aimed at improving anti-violence programs and reducing gun crimes. Global news 24 hours a day, on air and on Bloomberg Quick Take, powered by more than 2,700 journalists and analysts in more than 120 countries. I'm Mark Crawford. This is Bloomberg.
Those crucial moments in the trading day. This is Bloomberg Markets, The Close, with Caroline Hyde, Romy Thursday, and Taylor Brains.
We're not counting it down to the close. Only 27 minutes left to go in the trading day. Who will be the last one standing?
It's a good day for the reflationary trade, especially, Taylor.
It is. We're trying to climb our way back up to green on the screen, but it has been an up and a down sort of day. And you take a look at what was pretty much all green on the screen to begin with, is now about half green, half red. Underneath the financials, industrials, but some of the big tech remain is on the bottom, and indeed that's sort of what has been hanging on the indices.
Yeah, well, let's look at what's been rallying here, because it is, of course, a lot of those energy names that you have at the top of your screen. Marathon sort of emblematic of what that's going on. They're up 13%. And a lot of the meme stocks up here on the day. AMC, of course, up higher here after that stock sale, and of course that idea here that they're going to make some aggressive push into acquisitions. No one quite knows what that means in money. Said to have already actually sold their stake according to Bloomberg reporting. GameStop also getting the lead here. And keep an eye on Kodak. Interesting. Kodak also participating in this rally. Saying that Tisha James, she's the Attorney General here in New York. Moving forward with an insider trading case, this was related to that drug development, drug production deal that Kodak got that a lot of people had their head scratching back in 2020. Remember, there were a lot of share sales by executives there. She's apparently looking into that. Nevertheless, shares, Kelly, are still higher here on the day.
Well, Ramin, I want to take it back to the energy complex because you and Taylor both were talking about the outperformance of some of those stocks, and that has everything to do with oil prices. Brent crude especially is back above $70 a barrel. That is a big deal, but it will be a bigger deal if it can actually sustain above that level for an extended period of time, because it hasn't done so since 2019. Really, Brent crude, you can see records pretty range bound between the $60 and $70 a barrel level for about 3 months. And when you look at the 14-day RSI, a technical momentum, really haven't seen a lot of momentum in either direction. So if OPEC Plus's decision today, if the resumption of travel as the economy reopens continues to boost sentiment in the oil market, maybe we will see above $70 a barrel for some time to come.
All right, Kelly, let's talk a little bit here about just the migration of people. Everyone apparently leaving New York, going to Miami. Well, interesting, there's some data out here that apparently Miami isn't quite the hot spot that everyone seems to think of it. It's Austin, apparently. Taylor was just there. She spent the whole weekend on top of a bowl. Let's bring in Bloomberg's Jonathan Levin to talk a little bit more about some of the trends that we've been seeing with regards to people moving around the country, Jonathan. We've been talking a lot about at least folks here on the East Coast in New York and elsewhere moving down south to Miami, but you're showing some data here that says a lot of those people are actually going down to Texas.
Again, the contribution of this data is specifically looking at tech workers. It's what LinkedIn defines as the software and IT space, which is a pretty big umbrella there, and the most representative of tech broadly. And it shows, the data set shows that they saw net inflows in Texas of 217 people per 10,000 LinkedIn users already in the tech space there. So that's the biggest by quite a margin of any major city in the United States.
I think what was interesting, Jonathan, when we try to digest themes from the data, is that you see sort of second-tier cities where it's not a crazy New York or San Francisco, but there's still a lot of life in a downtown area. Are you seeing that? Maybe some second and third tier cities?
Oh yeah, I think you're spot on. I mean, it's not just tech. This is the big theme of the pandemic. People sort of questioning, who am I doing? In places like San Francisco and New York, what can I do for my lifestyle by going to a place like a Nashville or a Charlotte or a Jacksonville, Florida, right? We're always talking about Miami. Miami is relatively inexpensive compared to Manhattan. Don't get me wrong, but it's not a cheap city. You go to Jacksonville or Tampa Bay, it's a whole other story.
But Jonathan, if we're seeing people move to some of these quote-unquote cheaper cities in waves, is their cost of living actually going to be able to stay relatively lower?
Yeah, that's the big question.
Do this. Huh.
Are positive in the near term. It would take a long time. A lot of years for a Nashville or a Charlotte or Miami, for instance, to turn itself into San Francisco. So those, you're not going to see San Francisco rents in Tampa Bay anytime soon.
I live in Tampa Bay. Trust me, I know that.
In the meantime, Romaine, Taylor, and I all will be stuck paying New York stuff here in New York. Thank you so much for being Jonathan Levin. We appreciate it. T-minus 22 minutes or so to go. We'll have more out. This is Bloomberg.
Counting down to the closing bell. Brought to you by Fidelity Investments.
Don't like surprises? Proactive notifications from Fidelity keep you tuned in all day long. So when something happens that could affect your portfolio, you can act quickly. That's Decision Tech, only from Fidelity.
Tailor-made or one size fits all. Made to order or ready to go. With a hybrid, you don't have to choose. That's why insurers are going hybrid with IBM. With Watson on a hybrid cloud, they can use AI to help predict client needs and get the data they need to quickly design coverage for each one. Businesses that want personalization and speed are going with a smarter hybrid cloud, using the technology and expertise of IBM.
Nice bumping into you.
This is a land where resilience grows, where companies who have put their faith in us know they're on firm ground, know that the roots they've put down here are growing stronger again. This is a land where confidence grows, as we continue to open doors for existing and new investors to our shores, though we open them to a changed world. This is a land ready for the future. This is our
Shareholders are very happy.
Lawn? No. Cabinet? Handle. Bathroom? Tile. Air? Conditioned. Rack? Mounted. Parking? Placed. Your project? Finished. With a little help from Angie. Get $50 off your first home project at Angie.com.
My husband's happy like I'm a millionaire.
Angie. And
yeah, okay, so I got 300 shares of this one stock. Then I got 20 shares of another.
Oh, I've travelled all over the
20
country
shares
talking about
is the
saving
one
with
for this
Geico.
company
Well,
called
that's the
SoFi.
important
You probably
bit,
heard of them. They
showing
got
up,
today.
saying, hello, fancy a nice chat.
It started off as a student loan company that you could consolidate on your phone and stuff like that. They had way more products. They even have cryptocurrency and all kinds of stuff.
Contact.
So they just today finally went public because they merged with this big company. I know a lot about this company. You know, I used to work in finance. So
Geico, save even more when you bundle home and car insurance.
I got a real smart CEO. But anyway, so I got that. That's the stock that I already made. We got $7.
19 minutes to go.
I'm so happy. I don't know, when that turned green, I just lost my mind. I called you immediately. I'm like,
okay.
Don't make fun of me, baby.
Protections and downside hedging is that approaches a 2018
and
high.
so
A VIX is elevated just like
now,
a very low 18 handle. And then we covered with the high yield index. It hasn't been in a big sell-off mode. Earlier, it was positive. That hit of that risk on tone. It continues
also,
from the
when the
macro
market
level.
closed,
Let's do
they
it all with
would
Michael
do the
Grammy,
other
State Street
300
Global
shares. That one is
Advisors
only
team
16
investment
cents.
strategist Michael, of course, going to be sticking with us throughout.
They're going to be using, it's a gaming company, they're going to be using those NFTs that I was telling you about, like those digital trading cards. They're making a game
by the skew index as well.
Well, I think that it's important that as the economy continues to recover, there's likely to continue to be a bias upwards in interest rates and inflation. And so when we think in terms of portfolio positioning, those cyclicals and those value stocks will continue to outperform. So typically, there's a premium.
I didn't do anything though. That's what's so cool. Now I see how ridiculous it is. I did nothing.
Today that number's at 10 times.
I made more money doing it that way than it would be sitting and
actually expected to have earnings per share growth.
It's just that quick, $7. That was literally 3 minutes.
Cheaper by a bigger degree than normal, but they have better growth prospects. So cyclicals, I think, will continue to perform well in this market.
When we talk about, that's a great point that you point out there, Michael. When you talk about the growth prospects for some of those names here, can you also kind of talk a little bit more about some of the costs because I saw someone sort of raise this issue that said
I'm sick of looking at
some of these
that's
companies
okay.
didn't necessarily have the pricing power or the ability
I'm about to
to
be
control costs in a
ignorant.
way that, say, an Amazon or a Microsoft.
Exactly. No, I'm learning. I'm watching Bloomberg TV right now. I'm not doing anything that's not related to this. I'm
Could be a
just reading
challenge.
and watching this
Prices
shit like
are
this.
rising. It could eat into profit margins. But as we're seeing with the energy stocks today, they're again leadership. Prices of oil continue
I
to
gotta go. I have to watch Bloomberg. The bell is about to close in 18 minutes.
So I think that the kind of increase in demand prospects
I might have to buy something else. I gotta
will outweigh potentially the rise in costs and operating costs from this standpoint. So we are seeing margins expand some, despite the fact that you're seeing kind of a labor challenges, labor shortages, input costs rising. So margins still continue to expand, which I think is a good sign.
But if we are seeing labor shortages and higher input costs, all of that can be inflationary. What team are you on, transitory or sticky?
I'm on team transitory, and I guess I'm a little uncomfortably on team transitory. So I do believe the fact that coming out of the pandemic, we're not sure what demand is going to look like, and we persistently underestimate the rebound, the recovery, and the economy, earnings. You have the supply chain challenges, that's certainly weighing on inflation in a very, upward manner. And then finally, those low base effects. So I do think that we're in more of that transitory camp. I think longer term, the 4 Ds, debt, deficits, demographics, and the disinflationary forces of technology make it difficult for inflation to rise too much, too far, over a longer duration, a longer period of time.
Yeah, those disinflationary forces with regards to technology, the Fed itself has, of course, been around in the past. Michael, sit tight here. We do need to take a commercial break. We are speaking with Michael Aroney, State Street Global Advisors, Chief Investment Strategist. He's sticking with us as we count you down to the close, and we are getting closer. Absolutely, getting closer to the closing bell here. The S&P 500 right now is flat on the day, 4201. The NASDAQ right now also in the red. Russell 2000, that is your outperformer, up about 1% on the day. The Dow relatively unchanged here on the day. We are seeing some modest bids coming to treasuries.
Yeah, a little bit as yields come up 1 or 2 basis points, nowhere near the 3 to 4 basis points that we were this morning. But really, Kaylee speaks to Michael's point of it is transitory, and despite some of our 2-year break-even showing higher inflation, many people think that after that mark, it'll pass and fall back down. Maybe the peak fear has passed for now, but we will stay on top of all of the inflation data and, of course, the market close. 14 minutes to go. This is Bloomberg.
Counting down to the closing bell. Brought to you by Fidelity Investments.
Don't like surprises? Proactive notifications from Fidelity keep you tuned in all day long. So when something happens that could affect your portfolio, you can act quickly. That's Decision Tech. Only from Fidelity.
Enterprise artificial intelligence has the power to transform the most complex organizations and the world. Delivering medical supplies where they're needed, keeping our armed forces at the ready. Cleaner, safer energy. All thanks to 1 billion predictions per day. C3 AI is AI at a global scale, harnessing the power of data to build a better future. C3 AI. This is Enterprise AI.
Call 1-800-SANDALS. So much of the way that they're able to access this medium or like the way of expression is through gaming.
That whole culture exploring virtual spaces is absolutely critical to what we're able to do now.
Gaming is the only frame that we feel we can bring to it. Just shows how poorly we've actually thought about the issues. Me personally, not you, obviously.
Hyundai Motor, connecting art and technology.
I'm Wolfgang Back. When I started my online store, wolfgangbach.com, I knew there would be a lot of orders to fill, and I wanted them to ship out fast. That's why I chose ShipStation. ShipStation helps manage orders, reduce shipping costs, and print out shipping labels. It's my secret ingredient.
ShipStation, the #1 choice of online sellers.
And Wolfgang Puck.
Go to shipstation.com/try and get 2 months free.
A logo can do more than identify your company. It can connect in meaningful ways, energize your team, and inspire your customers. We're 4imprint, and we know your logo on the right product can create moments that matter. With 30 years of experience and thousands of products to choose from, we guarantee your order will be right the first time, on time, and for a great price. Be certain that the right moments will matter. Explore thousands of promotional products at 4imprint.com. 4imprint, for certain.
Have you been thinking about learning a new language, but thought you didn't have enough time, or that it would be too difficult? Welcome to Babbel. Created by language experts, Babbel's lessons are built around teaching you real-life conversations. Babbel uses interactive dialogues with realistic scenarios to get you speaking confidently.
Salut Finn, tu vas bien?
Oui, je suis à Paris pour le week-end.
Babbel uses proven cognitive techniques to help you remember what you learn. That is the power of Babbel. With 15 minutes a day, you can start having conversations in a few weeks. Every aspect of Babbel is designed to teach you how to talk to real people in the real world.
Salut Finn, comment ça va? Très bien, merci. Et toi?
Babbel, language for life. Start learning today at babbel.com.
James, what are you doing?
This is the countdown to the close on Romaine Boston.
I'm Taylor Reid. And I'm Kaylee Lyons. Caroline Hyde is off this week. And she's off, but I'm stealing her lines chart, Romaine. It is the chart that we do, and today it's telling a very, very interesting story. One that we've, well, really been seeing. It is the Russell 2000, the big outperformer relative to the NASDAQ 100. So you're seeing that small cap reflationary trade. It wins out again, particularly when you think about big tech and some of the high valuations as we await big tech earnings perhaps today.
Yeah, and we should point out too that a lot of what we're seeing, the oomph out of the Russell today, is because of energy stocks here. And you look at the S&P 500, that's also energy names that have basically kept this the S&P from going deeper into the hole here. Marathon Oil up 14% on the day. The S&P 500 energy index right now having its best day, I believe, since February. To the flip side, you have healthcare stocks having their worst day since January. A lot of those diagnostics companies are getting hit hard here today. And airlines doing well, as well as the KBW Bank Index, the rate environment, the economic environment, shaping up to be good, at least for now, with regards to those bank stocks.
Let's go back and bring in Michael Aroney, State Street Global Advisors, Chief Investment Strategist, still hanging out with us as we count down to the close. Talk to us a little bit more about how you're thinking. We were talking about the cyclical trade before this, and yet you think about some of the earnings that we're going to get, like a Zoom, communications. Can you have both sort of that reopening trade and the shift towards technology?
You can have it both ways. And so, Taylor, I think what's interesting here is that we do think in the short term, given that reflation trade, the economic rebound, that's why we favor cyclicals. But like I was saying to Romaine, in terms of the longer-term structural challenges of debt, deficits, demographics, and technology, to get too high. So you need organic growth in your portfolio. Now here's the challenge. FANG makes up a big component of investor portfolios already. We saw earnings were blowout and the stocks didn't really do much. And so you have some challenges there. We know the regulatory spotlight is going to shine right on FANG. So what we're suggesting for investors is to look beyond FANG to disruptive technology across categories to kind of look at the next Amazons and Apples and Facebooks and Alphabets from that perspective. So we're encouraging folks to look beyond FANG for that disruptive technology.
Michael, you mentioned regulators there. Of course, we know regulators are also keeping a very close eye on what's happening in the crypto space. What do you think of what we're seeing with Bitcoin, with some of the meme stocks, some of these signs of exuberance in markets, and how does that translate into other risks?
Now we took this out of the back.
Saw earlier in the year there was a number of red flags to suggest markets were getting a touch frothy, whether it's the meme stocks, whether it's earlier in the year there was a number of red flags.
Here with me, but the market is closing at 5 million.
Culture. It's culture.
Here with me, but the market is closing at 5 million.
Culture. It's culture.
Yeah. I just transferred $100 in there because I was trying to get $200 worth of that penny stock. This one that I just purchased, I spent $430.
Wait a minute, you not flip a clip.
For most, it's to kind of earn money to see crypto go from 35,000 to 50,000. It's not to protect portfolios against drawdown, to diversify portfolios. And so I think it's important to think about investor motivation behind some of these things. And when it comes to crypto, it's typically to maximize profit and not play a different kind of role in a diversified portfolio.
Michael, I want to get your thoughts here on moving outside of the U.S. here with regards to investment here. We've seen a lot of money start to flow into some of the EM names.
I literally do have Bloomberg playing back now.
With European stocks versus the S&P 500 here.
I had a meeting with
So I do think European equities are interesting right now. As we know, Europe is a few months behind in terms of vaccine progress compared to the U.S. They're also a few months behind in terms of fiscal stimulus flowing through their economy. But the Recovery and Resilience Facility will begin to flow this summer. That should help the European economies. We know now they're going to allow tourism to return for those that have been vaccinated. The European Commission is raising their GDP forecast for this year and next. And in fact, analysts have been increasing their earnings expectations so much so that European equities now have an 8 percentage point earnings per share advantage compared to the U.S. And then finally, when we look at the composition of the economy, and therefore the indexes for Europe, they're a bit more cyclically oriented. Your energy, your materials, your financials, your industrials, compared to the U.S. So if you believe in the global cyclical trade, Europe trades at a relative value, and it has all these other benefits. So we think it's kind of interesting right now.
Back in here in the U.S., stocks relatively unchanged here on the day. You are seeing a bid into some of those materials names, like the steel companies, as well as the oil names. Michael Aroni with State Street Global Advisors. He's sticking with us as we count you down to the close, but we want to jump over to Taylor.
And it's my stock of the hour. It is everything that we are going to be looking at at 4:05. Zoom video. Are we still using it?
What do I want, Mom? I don't know. Don't ask me what you want.
That will be the key question that we get for analysts. It's a big underperformer year to date.
You tell me.
60% in the last year. Stock today, of course, taking a little bit of a breather as well. The revenue number quickly, $910 million, EPS of about 98 cents. That's what we're looking for the first quarter. We take a look at a chart here that I'm showing at every terminal. Michael, I'd love to bring you back into this conversation. You were talking about the debts, the deficits, the deflationary, all of which make inflation transitory in your view. But you have a 2-year break even that's climbing. You're now at a decade high. You're at 287. I know it's higher than the 10s and the 30 break evens, but does anything about that make you nervous in the short term?
It is interesting that in many instances inflation expectations are rising, and they tend to be a self-fulfilling prophecy. So it is something to keep an eye on. I think the key gauges or barometers here, Taylor, is around the labor market. So I think the Fed will continue to dismiss increases in a lot of inflation measures as transitory for the reasons we cited. The supply chain effects, the low base effects, the increasing demand. But it's really going to be difficult to dismiss wage inflation. So here I think the jury's still out. We've seen Amazon, McDonald's, Walmart raise wages. We're hearing about those shortages. But is this simply something coming out of the pandemic, or is this something more permanent? So to me, the Fed will be focusing on the labor because they have no other choice. They painted themselves in a corner on other measures of inflation. So to me, that's the key barometer.
Michael Aroni, State Street Global Advisors, Chief Investment Strategist. Always appreciate your time there. Remain as we take a look at the positive economic data as well. This morning, the ISM numbers showing really strong
strong orders as well.
That's right, and you're seeing that reflected, I guess, in sort of what's being bought today with the Russell 2000 leading the charge. We are moving, of course, closer to that closing bell here on this shortened week, a 4-day work week. We give you 5 days of effort, full market coverage as we take you to the bell and beyond.
Beyond the bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close starts right now.
And right now we are about 2 minutes away from the end of the trading day. Romaine Bostic, Kaylee Lyons, Taylor Riggs counting you down to that closing bell. And here to help take us beyond that bell, our global simulcast team, Carol Master. Welcome back. Tim Stenevin, No Tie, bringing together our Bloomberg television, radio, and YouTube audiences.
Wait, I have my tie. What are you talking about?
Well, Carol always looks great. So, Carol, let's start with you here. It's quite an interesting day here. We're coming back. A lot of folks back at work, back in front of their trading desk. Right. And it's kind of a wild day.
Yeah, wild day, except if you're energy, man. This is your outperformer in the trade today. We're looking at that group, the major industry group of the S&P 500, up almost 4%. Listen, this is the trade, Tim, that we've seen all year. If you look at the major industry groups in the S&P, the top performer for the year so far, up 40%. It's the energy names.
Yeah, look, quite a day for quite a year for energy thus far, but comes after just a dismal year last year. I mean, a little over a year ago, we were talking about negative oil prices. But if you think about today's trade, we were flirting with records early in the day, but stocks fluctuated after we got the U.S. manufacturing data that topped estimates. It showed a little bit of weakness in employment figures, spooked in equity investors just a little bit. The S&P 500 bouncing between positive and negative territory throughout the afternoon. And believe it or not, guys, almost time for another monthly jobs report that I certainly had my eye on, given quite the miss that we got last month.
And Tim, that comes, of course, after some relatively strong economic data that we got just this morning, as you're right, to push us forward to Friday. It was, of course, some of those ISM manufacturing numbers expanding at a faster pace that we got to 61.2. You had strong orders growth, you have good demand, but you also are getting the longest delivery time since 1974. So supply chains still really do sort of hang us up here.
All right, well, we're getting the closing bell here. You run through the numbers, you get 42.01 and change on the S&P 500. That's relatively unchanged on the day, down less than 1/10%. The NASDAQ also down about 1/10%, 13,737. Dow Jones Industrial Average in a relatively decent day, up around 34,576, up 1/10% here. But the Russell 2000, that is your outperformer here on the day, closing higher by about 1%.
Well, and if you're a meme stock like AMC today, we know that maybe, there's nothing logical about it potentially. It's such a great story of a big investor or an investor buying into it and then saying that they're completely out of it. But the share price nonetheless rally, and it just reminds you that there's some illogical things, Tim, in this marketplace.
Yeah, hey, wouldn't it be nice to be a meme stock? I mean, to the moon, right?
I could do to the moon all day long, but unfortunately I have to do sectors before I can do memes, and there's no memes on my board, but it is relatively similar to what you guys were talking about energy here, up about 4%. That really was the leader in the day. Everything else up pretty risk on for our radio audience. Banks, materials up 1 to 1.5%. That's the green on the screen. The red, unfortunately, is technology, and that continues to be the story with the Russell 2000 in the positive. Technology is in the red, with hardware and equipment, services, all of that, Carol, sort of is the name of the game these days.
All right, I'm going to get to energy gainers in just a moment, but let's start with SoFi, because we actually had a company going public today thanks to a SPAC. This is a SPAC backed by Chamath Palihapitiya, and we're talking about SoFi. That stock up about 12.4% in today's trade. We're talking about one of these fintechs, really kind of an array of services on their platform, from lending and savings into trading. So that was certainly one of our gainers. Got to talk about the energy patch. Taylor just talking about it. Overall, certainly one of the standouts in today's trade. Devon Energy, your number one gainer in the S&P. It was up about almost 14% in today's trade. They got an upgrade from Raymond James, but of course it has to do with OPEC coming out.
Carol, do you remember the death of shale? Is that over?
I don't know. Listen, as prices go up, right, this is something remains that we'll have to see whether or not new production comes in the market, certainly here in the U.S. Right now, though, OPEC saying we're going to just hold off until July, even though that they see demand coming forwards, and that's why you saw so many of these energy names higher. JD, I just want to mention Loop Ventures coming out, capital markets, and just talking about some of these U.S. listed shares of China-based tech and internet companies like JD.com and Baidu. They like them, says valuations in the group are attractive, and they were hired. Honest company, just like talking about Jessica. It was up about 7.2%. 0.2%, initiated with buy ratings over at JP Morgan.
Well, you got the gainers, I got the decliners, Carol. The Johnson & Johnson talc story is not over. It continues. Judge ruling, or I guess I should say that because the Supreme Court did not take it up, Johnson & Johnson must pay $2.1 billion award to women who claim that its baby powder was contaminated with cancer-causing asbestos. This after the U.S. Supreme Court left intact the largest verdict in the almost decades-long litigation over the product. Johnson & Johnson finishing the day down more than 2%. Lumentum down more than 1.6% after it was downgraded to neutral from buy at Goldman Sachs. F5 Networks, the cloud application security and delivery company, down more than 3.3%. It was downgraded to sell from neutral, also at Goldman Sachs. And this is a fun one, AT&T. I'd like to continue to follow that company.
That's fun.
It is fun. It's just ticker symbol T. It's old school. The new company. This is, but here's a new spin on the old company. Okay, the new company being formed by Discovery and AT&T's Warner Media. It's not AOL Time Warner, guys. It's not Warner Media. It is, drum roll, Warner Brothers Discovery. That's what it is.
Very creative.
Tim on game night is probably not fun. I'm just going to say.
How many executives do you think were in the room who came up with that name?
Yeah.
I don't need a lot of consulting firms, right?
That was a lot of build-up, and I'm not sure how I feel about the end result. So let's just switch it up. Let's talk about factors. What did well today? Stocks that have seen their price targets getting ratcheted up That's your best performing factor.
Okay.
2%. You have up there as well. What was lacking today? 5-year sales growth. There is a lot of healthcare and a lot of technology securities that are tracked within this factor, and that, of course, as you know, has been what was underperforming in today's session. I also want to point out market capitalization, not a great day for the largest of large cap stocks, as we know, Taylor. A great day, though, for the small caps. Yes, indeed, and some of the small
Can we
caps.
just point out too with those small caps? Sorry to interrupt you though. So a lot of that, I mean, we talk about energy, but we also have to mention too the bank stocks, which had a great day, and that actually helped to lift the Russell as well. The KBW Bank Index closing at a record high today. You may proceed.
Financials are still the second best performer after energy, up about 30% year to date. So that's been a theme because yields are rising, and you continue to see that today with the theme of the financials, with the theme of the Russell small caps, that reflationary domestic focused trade. As you were up anywhere from 2 to 3 basis points earlier, now we're up about 1 or so. But Harold, this really folds into this idea of that reopening trade. We're coming off of a really strong holiday weekend in terms of travel statistics. You're up 15% yesterday on a day-over-day basis. 1.9 million travelers, and get this, you're up 460% year over year.
All right, I don't know if HPE and Zoom executives were on the road because they were probably finalizing their earnings reports right now. HPE just crossing the Bloomberg terminal. We're talking about Hewlett-Packard Enterprise. Here's the big red headline, boosting their fiscal year adjusted EPS outlook to $1.82 to $1.94. Folks, they are raising it from $1.70 to $1.88, so giving it a little bit of a boost. Enterprise, this is important. Second quarter net revenue, $6.7 billion. That's a little bit above estimates of $6.61. Second quarter adjusted EPS, that's a beat, 46 cents a share, so that's 4 cents better than what Wall Street was expecting. And fiscal year free cash flow, we're looking at 1.2 billion to 1.5. They have seen 1.5.
Those pack dots.
And you can see the stock just up a hair, Taylor, up about 7/8% in the after hours.
And you're seeing some improvement on Zoom. First quarter.
I wanted the Pac-Man battle.
Going well, outperforming estimates of $910.2 million. You migrate down to the bottom line, adjusted EPS of $1.32. Analysts were looking at 98.99 cents. Forward guidance, that was the number that we were trying to see. How well do we do? And indeed, it seems like we do pretty well. Second quarter revenue coming in $985 million to $990, well outperforming expectations of $940. And you push that forward to the full year, almost $4 billion in revenue.
Can I sit with you? Can I sit with you, Mommy?
The second quarter, that full year forward guidance. This is a company that might be doing better than we thought, even though
You have to sit with Mommy.
I'm going to bake the cookies.
this is the stock that was
Mommy.
60% in the last
The cookies are in their mom and papa's house.
Why did you leave them there?
I forgot to.
On the surface, obviously, looks like a solid print.
Will you come back to get them?
Yes, I will.
When?
Okay, hold on, Mommy is working, okay?
Pac-Man bother. Okay. Can you go to Mommy's house to bring the cookies, Mommy? What can we do today? Can we do it
Yeah,
today?
I'm looking at a part of the press release. The CEO, Eric Watson,
Andrew, I'm working.
very strong first
Do
quarter.
it today.
91% total year-over-year revenue growth. That combined with the strong profitability and cash flow. He later continues, work is no longer a place. It's a space domain where Zoom serves to empower your teams and to bring their best ideas to life. Yeah, in case you were wondering.
My boss said,
Wait, what's their business? Yeah, exactly. It's like we work CEO saying, you're going to get a promotion and go back to the office.
revenue growth that they were used to, Tim. I mean, we were talking like, 300%, 400% revenue growth. I think in the most recent quarter, 177%. That's going to drop down, based on analyst estimates, down to 24% in the third quarter and down to 15% in the fourth quarter. So if that is true, if that sort of does come true, that really takes the growth story out of the stock.
Well, look, it's a question about reopening and what reopening looks like. It's a question about business travel and what business travel looks like. It's a question about the hybrid work environment and what a return to office looks like. Because it's not going to be all or nothing. It's not going to be like we're just Zooming or we're just in the office. And to what extent are companies going to be paying Zoom for that privilege?
Yeah, there's also a lot of commentary, not only about Zoom, but the type of audience that stays on there. And do you have the big paying customers? And they're talking about 497,000 customers have more than 10 employees. That's up 87% on a quarterly basis. And about 2,000 customers contribute at least $100,000 in trailing 12-month revenue. So it's looking like they want to try to get some of those bigger, higher-paying customers, Kaylee. And it's all about the churn with the smaller customers as well. So we'll be looking for more details on that on the call, of course, Carol.
It's a $96.5 billion market cap company.
Yeah.
Just going to leave it on that one. All right, we're going to certainly watch it in terms of the trade yesterday.
All right, that's going to do it for Beyond the Bell on Bloomberg Radio, Bloomberg TV, and on YouTube. We'll see you again across platform coverage of the market close. We'll see you again tomorrow, same place, same time, everyone.
It is same place, same time. It is more markets coverage that is coming up. We are digging into more of those Zoom earnings, what they mean, and that forward guidance, and a sell-off in the stock of about 5% in after hours. This is Bloomberg.
Today's countdown to the closing bell was brought to you by Fidelity Investments.
Zero commission trades for online U.S.
Andrew, can you go get me a bag of Funyuns?
And a commitment to get you the best price on every trade, which saved investors over $1.5 billion last year. That's Decision Tech, only from Fidelity.
It's not some magical number. And it's not something we just achieve at the end. It's a feeling of freedom to live our lives the way we intended. Through the ups, the downs, all of it. This is financial security. And Lincoln Financial Solutions. This is Lincoln Financial.
Cover your mouth.
All access membership separate. Retirement income is complicated. As your broker, I've solved it.
That's great, Carl. But we need something better. It's easily adjustable.
Has no penalties or advisory fee.
And we can monitor.
So that we're on track.
Like Schwab Intelligent Income.
Introducing Schwab Intelligent Income, a simple, modern way to pay yourself from your portfolio.
Oh, that's cool. I mean, we don't have that.
Schwab, a modern approach to wealth management.
right, once again, another mixed bag on Wall Street. We spent a lot of time talking about some of the broader market indices out there. We spent a lot of time talking about bank stocks. I want you to take a look here at the outperformance of the KBW Bank Index. That's the blue line here. You see that pin here. Going back, I decided to go back all the way down to 2020 here. That's your white line here. That's the S&P 500. KBW Bank Index closing at a record high today. This has sort of been the stealth rally here, the stealth outperformer on a year-to-date basis. When we talk about the recovery trade and the reopening trade, a lot of it's going to be found in bank stocks, particularly if the yield environment continues to go the way investors seem to think it would go. And this is your yield environment. It is pretty much unchanged. You're looking at 160 basis points right now on the 10-year yield. We've been stuck in a pretty tight range here now for the past month and a half here. We haven't made any sort of meaningful move above that 1718 level, or no meaningful move downward. Everyone seems to think, though, that will be broken at some point. And where it goes will obviously depend a lot on where inflation expectation goes. 87, 89, 87, 88 basis points, excuse me, is what you're in the hole right now for with regards to your 10-year and to the Bloomberg Dollar Spot Index. A lot of money, though, out there looking for a home, and it's not looking for a home here in the U.S. It's looking for it overseas, in Europe and in emerging markets. We talk about the performance of the KBW Bank Index. The other outperformer here that's been emerging markets. A lot of money sloshing around in. That was the outperformer in May. A lot of strategists right now, Taylor, seem to think that's going to be the outperformer in June.
Let's talk about some of the outperformers, some of the underperformers today. Again, recapping some of the earnings releases, Kaylee, that we've had from Zoom. It looked good for first quarter revenue, $265 million. I'm sorry, that was cost of revenue. Let me repeat myself. First quarter revenue, $956.2 million, well outperforming expectations. The bottom line of $1.32 outperformed estimates of about 98.99 cents. Really, the second quarter and that full year guidance also looked really strong, but for a stock that's up 60% in the last year, there are high expectations. Absolutely, and you see that reflected in the fact that shares are down more than 3% in after-hours trading. Let's get more on the results now with Amin Bensaid. He is technology, media, and telecommunications analyst for Bloomberg Intelligence. So poke some holes in the results. What's the biggest problem area?
Thanks for having me. So, I mean, in addition to the valuation for this company being relatively high, what we're more focusing on is the customers that generate over $100,000 for Zoom, the enterprise customers. And what I think it's trending, it looks like the pace of growth has a little bit slowed down. So, in the last quarter, they used to be around 156%, and that grew to 160%. So that, to me, is a little bit worrisome, because there is a focus on this next few years, which is to expand the enterprise customer. But other than that, it's a acceleration of growth for the overall customers that was expected post-pandemic. But I think the focus, especially on the investor focus, is probably going to be around these larger customers.
So, I mean, a lot of focus, of course, is on that revenue growth and that deceleration of revenue growth. Is there an opportunity here? I mean, you talk about them focusing on the enterprise customers. Is there an opportunity for them to really refocus their business on profit margins themselves, a way to sort of capitalize on the customers they already have, rather than just trying to continue to grow that base?
Absolutely, because when we look at the enterprise customers, the larger customers, what they want from the communication is beyond the video or messaging. They also want more collaboration tools, and they want everything to be bundled in one package. That's what Microsoft does better than anyone, and that's what Zoom is trying to achieve. So for them to keep growing in that part of the business, you either have to build more collaboration tools or make some acquisitions.
All right, I mean, we're going to have to leave it there. Amin Bensaid of Bloomberg Intelligence. We want to go down now to Oklahoma, where President Biden is preparing to speak here at the Greenwood Cultural Center in Tulsa, Oklahoma. We're going to stay with this picture for right now, as Biden is down there to commemorate, of course, the 100th anniversary of what is known as the Tulsa Massacre. This is essentially, for a lot of people who know, this section of Greenwood was one of the most prosperous communities for black people at a time when prosperity for black people was rare, and it was effectively burned to the ground.
4, 5, almost 5 years old, coming to hear a president speak. My Lord, my faith, we call that purgatory. Congress. And so if I didn't walk around and pay my tribute to Lisa Blunt Rochester, my congresswoman, immediately.
I couldn't fit the subscribe for more videos text like over anywhere else, so I had to put it at the bottom instead.
Powerful story and for helping the country understand what's happening here. And to all the dissenters here today, to the community, civil rights leaders, and members of the Congressional Black Caucus that are here, thank you for making sure we all remember, or we never forget. You know, there's a verse in 1 Corinthians that says, "For now we see in a mirror dimly, but then face to face, now I know in part, then I shall know fully." It is, I just toured the Hall of Survivors here in Greenwood Cultural Center. And I want to thank the incredible staff for hosting us here. And you make me feel and if I didn't say what my father would insist on, please excuse my back. I apologize. But in the tour I met Mother Randall, who's only 56 years old.